everybody. Well, welcome to our Wednesday Hump Day Market Update. I'm your host, Lee Seiler, also known as the Stock Doctor. And alongside of me here, as usual, is the one, the only, the one that everybody, loves in our office. Not in our office, I'm sorry, clients. No, people, not everybody loves you in the office, but the clients do love you. Nikki Ward. Yes. Hey, I want to make sure, Andrew, can I make sure that Nikki, talk to me real quick.
How you doing out there? It's night in Facebook land. And in case you're not seeing this on a Wednesday night,
okay,
good morning,
it's working. Okay, we're just verifying something. Anyway, I hope everybody's doing well, and certainly more well than the market has done.
How are you feeling, Lee? How's
I feel
the
great.
Stock Doctor doing?
I feel great.
Yeah?
Thanks for asking, by the way.
Absolutely.
I always feel okay. I mean, you always kind of, at my age, you always have to worry about certain things, although I don't worry about really much. Although, working out.
You're a good barometer, though, for not allowing emotions to cloud your decision-making or even how you're feeling. You're just always...
I try to be even. You know what? I've always learned in my day, you don't want to get too high and you want to get too low. And it's really easy to get too high, though. It really is. Because sometimes you go,
the euphoria.
But I mean, really, but then you can't worry about it when things don't go so well. But let's talk about, and we're here, and you guys are listening to us, hopefully. The dozen of you that are listening to us. Yes, of course. Jeff, hi. We are here to talk about what we think the markets are going to do based on what they have been doing, because history does repeat itself. And we have gone through this year, which is not a great year, although it could be way worse than it is. It could be way worse. I mean, Nick, everything's down for the year, but even though we had a great July, up 9%.
August started great. The momentum.
August started great.
And then it fizzled out. But these things do happen. It's not the end of the world. The sky is not falling. And it's not different this time.
Not yet.
This is the price of admission to be in the market.
And that's the thing. If you can't take the heat, you need to get out of the kitchen. That's the point. If you're saying, and these are one of the reasons, or there are several reasons why someone could say, I can't take this anymore. If you are retired and you live on this money and you say, oh my gosh, I can't have this go lower, then that's a reason. Or if you're really close to retirement and you say, I need to live off this money here in the next 2 or 3 years, I can't take this anymore. Or if you're just a nervous Nelly and just can't take the volatility. Because, folks, I don't care what anybody says, but I've always said this for many, many years. I've said the stock market is a risk investment. It is. However, if you have time and you have patience, you usually do really, really well. And in a 5 or 10 year period, you most of the time, and I'm talking, in the 90 percentile times, you do extremely well.
I think, too, it's funny to hear you talk about patience, because I think the only thing you're ever patient with is investments in the market, perhaps.
True. I'm not the most patient individual in the world.
However, I think also, too, if you are a nervous Nelly, and if you're in any of those circumstances, if you're close to retirement, if you're in retirement on a fixed income, if you're a nervous Nelly, you also need someone to steward the ship. You don't need to be the one making the decisions. You need to have someone who is dedicated to making those decisions on your behalf, who is not involving emotion in that decision-making process.
Right. So let's, before we get into the meat and potatoes of tonight, let's talk about what people's biggest investments are besides their homes, is usually their 401ks. And we can now help you with your 401ks. And we are getting a lot of our existing clients that say, oh, you can now work with my 401k. Please help me, because 401ks usually have limited options, which is true, and we will work with those limited options. However, sometimes we can have other access to other investment opportunities throughout or within your 401k. So this is something that if you want to reach out to us, let's talk about it, and let's make sure, even if you're a client, yes, call the number. If you're not a client, call the number and let's talk about it. I had a client today that I was talking to, and he says, I want to talk to you about my 401k that I saw an email about. We sent an email to clients and, hey, we can now pretty much work with everybody's 401k. So, that's the kind of things that we want to try and do, because there are some interesting statistics and or studies done by Vanguard, which, I think everybody trusts Vanguard's research.
It's quite a name. I mean, I don't care who you are. You know the name.
Exactly. And they say, and they use a case study, did a case study saying that a 45-year-old with $200,000 in their 401k without using a professional investment advisor will have about 600 and something thousand dollars in 20 years, which is
on average means about a 6% return per year for that 20-year period.
Which is pretty good. However, with a financial advisor, that number jumps to about 1.2 million, about 9%.
That's thinking 9% annually, and that is taking out any fee that you pay that advisor
right,
for
that's
that
net.
Professional management.
Yeah. So my point is, we can now help with the 401ks, 403bs, TSPs,
457s,
variable annuities, all that stuff we can do. So let's get right into it. So the market today had a rough day, and
closed out a rough month.
It had a rough month. So of course, we closed out the month of August, and we were down about 4%.
4 days. Brutal. 4% down for the month, and last 4 days. Ugh.
Yeah. So let's talk about what's going on here. The Dow Jones Industrial Average. I want to go back to this because, all right, the Dow Jones, which this is smaller print here, but the Dow Jones down 280 points today. You see that 280 to close at 31,510. The S&P 500 down 31 at 39.55. The Nasdaq down about 0.56%, 66 at 11,816. Small caps were down about 1%. So what we got to look at here is that the market for the month of August down about 4%. That's after about a 9% rally in July. So where we are, the S&P 500 has pulled back pretty much dead on 50% of the upward move. And I'm going to make a few adjustments here because I like making these a little bit. Okay, so let's...
As valuable as possible.
Yes. Okay. So let's share the screen here, and this is a chart of the S&P 500. Here we go. We started the year. We hit the all-time high. The market pulled back, rallied. Now, keep in mind, trends persist, okay? So let's eliminate all this for this year. Let's look at last year, okay? Last year, rally up, pull back. Rally up, you had a nice extended move. A pullback. Rally up, a pullback. This is a 50-day moving average. Rally up, pullback, rally up, pullback, rally, pullback, rally. Really violate the 50 and 200-day moving average, and now a new trend starts. So we had a series. I'm going to draw some lines for you too. Annotate. There we go. All right. So we had a series of higher highs and higher lows in the S&P 500, and then now we have a series of lower highs and lower lows. And folks, trends persist. That's rule number one in technical analysis. So here's the good news. You had a rally off the low of 36 and change right here. We rallied up. Oh, let's go here. We rallied up. We broke that downtrend. However, right around that 50-day moving average, it violated the last 2 days. But trends, especially extended trends, can give up to 1/3 to 2/3 of its move. We are now, literally, when you draw a line right here, we are a 50% retracement of this move. So from here, 36 and change, to 43 and 42 and change, so 43 and change, we are a 50% retracement. That happens, okay? And that is allowed to happen on any substantial stock move, and also for the downside too. When markets move down in a substantial way, they're allowed to give a rebound of 1/3 to 2/3 of its move. So
it doesn't mean that anything has changed as far as broadly speaking. It just is what happens.
And nothing really has changed. And
I mean, just like trends persist and the trend is your friend, don't fight the Fed.
well, and that's the problem. And then the Fed, look, there were people thought the Fed was going to be a little bit more dovish, and it turned out that they are
Apparently
a little
they
more
weren't
hawkish.
listening.
Yeah, and Jay Powell, he made a statement last Friday at Jackson
No
Hole.
one really paid attention to that, though. They
Yeah.
weren't making on every word or anything.
Well, here's the thing: is that interesting? The year prior, everything Jay Powell said was incorrect.
What was it?
Everything was incorrect. Transitory. Everything. So the S&P wasn't able to hold the 4,000 point number. That's okay. We understand that. It also violated the 50-day moving average. We now retraced. Okay, so this 2-week sell-off we've seen in August is putting the market in a little bit oversold condition. So what that means is we are oversold. We could certainly go lower, but we're poised for a rally at some point. Not sure tomorrow's the day. But now we also are going into a time of year which is typically really bad for stocks.
Remarkably boring. Just consistently terrible.
Consistently terrible. Yeah. I mean, boring is, people don't think it's boring when you go down in price, but the markets are going to probably go down in September. This is what they do. However, when you look at, and by the way, the numbers are for September since World War II, on average, the market goes down 0.56%.
To me, that's boring. Come on.
That's not a lot. Doesn't sound like a lot, even though you have big drops.
In September, it doesn't mean that that's what September in its
Exactly.
entirety is going to feel like.
However, that being said, that for the month of October and November, we see big gains.
October surprise.
October 0.9%, September 1.4%, and December 1.6% gains. So October sounds really bad because all the crashes occur, but usually the rebounds also occur.
They don't usually get that kind of credit, though, October. Poor October. Especially because it's a midterm year. I mean, if we have just kind of a negative September, that would be on point with what it looks like typically during a midterm year.
The Fed has said they're very data-driven. We know that. And we have the August jobs report will be reported on by the Bureau of Labor, will be reported on Friday. So the ADP report came out today, which was half of the jobs they expected. So in other words, the ADP report, which is of course a big public company, ADP comes out with a report on a monthly basis, and they said that the economy added 132,000 jobs based on their metrics. Mm-hmm. They were expecting 268. That was 268 last month. They were expecting 300 this month. So which leads me to believe that non-farm payrolls, which is the big number, they're expecting 318. ADP and non-farm payrolls, they're not exact. But 318, are we going to miss that number? Is it going to be, which would probably be a good thing for the market, if the number came in at 200?
Oh, man, you're asking me to go against the grain of negative Nick here. I want to say we're at least going
that'd be
to
negative.
hit 318 or slightly under. I don't think it's going to be a vast number.
It may not be. I'm just asking, but if it does, if it comes in...
At any point, it would be over.
If it comes in, I don't see how it could be over. That. If it comes in at 250, 200, that may be good because the market, keep in mind,
but that's the thing. Like, I don't know if what the Fed is doing and intentionally doing is really rippling through to the labor market just yet.
I'm just going by ADP.
I hear you.
We don't know. And by the way, those ADP numbers, out of the 132,000 jobs, like 90,000 were service industry.
And that's the thing. You still see so many different industries that they themselves haven't quite recovered, and they're still really searching for people to fill the open positions. I mean, unemployment is not going the way that the Fed is. It's not trending in the direction the Fed wants. Right now, the unemployment number means we've got 11.2 million job openings. So that's 2 job openings for every 1 person who's looking. Because our labor participation percentage has also fallen.
Okay, so let's talk about what the Fed really wants to do here. The Fed wants you to feel less wealthy. That's exactly what the Fed wants. Because
they want you to be house poor.
They have to. Well, yeah, they have
want
to.
You to spend.
They have to curb inflation, and the only way you can curb inflation is by curb spending, curb
Destroy
demand. And the Fed, and I've gone through this many, many times. I mean, I see what they do. They want to put people, they want unemployment to go up. I'm not saying that they're doing this to ruin our country. This is what they have to do because inflation's at 8%.
And they're inflicting short-term pain
Right.
in order for the long-term to not do serious damage to the underlying economy.
Which is a great point because Jay Powell said, expect more pain. That's what scared the market.
That scared the market. And I see what he is trying to do. I completely sympathize with him. I would not want to be in that position. However, does he have the bark to match his bite? Because like you just said, Jackson Hole last year is like transitory. Inflation is not here to stay. This year, whole new Fed
Okay, so
chairman.
what are you saying? So you're saying that does he have the cojones
to once he sees real pain being inflicted on the American
keep going?
people to actually stick to the plan that he
Put his foot
is
on their
so
throat?
voraciously saying I'm gonna do? Is he going to actually curb stomp, or is he just going to?
Well, I don't think there's going to be a soft landing. And in fact, I think that when they go 6 to 8 months down the road, they're going to say, yeah, we're in a recession.
And I also think that there are things out of his control, supply chain. You know,
He
you
can't
have
control that.
geopolitical issues. There are things outside of his control that are affecting that choice that he's making. It's not all because he doesn't want to be doing this.
No.
But it's what needs to be done.
No, he'd much rather have a nice era where, hey, the
doesn't
markets are
wanna be
going up,
Volcker.
everything's happy. Look,
He doesn't want to be Paul Volcker. He wants to be a Ben Bernanke. He wants to be the nice guy, but that's
he
not what
wants,
we need right now.
but here's what has to happen, folks. And just, I know everybody's all happy when you look on Zillow how much your house is worth.
Just go look at your 401k after that.
He doesn't want that. He wants your house values to go down. And why is that? Because housing, which is 30% of GDP or something crazy like that, or 30% of CPI,
Right.
crazy, rents are too high and housing prices are too high. That's fact.
And something about the housing market with the slowdown, with baby boomers living longer, staying in their homes longer, and that turnover not being as quick as it used to be, and the supply being so limited. And I mean, listen, if we're in a slowdown or a recession in the housing market, builders aren't just going to start popping up, single family homes. But if we see that, I lost my train of thought.
Well, I think we're saying if you see that kind of slowing down.
Oh, then rents. There we go. Thank you. Rents, which are what people are going to be forced to do if they're not owning. That's such a sticky.
I'm so glad you had that moment. Because I had that moment all the
I have
time.
a senior moment.
I always have that moment. It's like, oh, what am I talking about? I
You
can't
cover
remember.
it well, though. I just blinked. I was like, deer in headlights right there.
You know what? Because I kind of know how to fake it until
Cover it. I gotta fake it till I
I
need
gotta
it.
buy some time to figure out what I was thinking about. No, but you're right because look,
It's going to be stickier, and so inflation's going to be higher for longer. 'cause
Nick,
rents are
if
not
when
going
rents
down.
when rents in the Central Florida area are $2,000 average, $2,000 to rent a place, and when the average home has gone up like it did. I get it. We all love that we bought a house. We all love that we own properties and they've rallied up. But real estate is not supposed to go up more than about 6% a year. That's what it does. That's what has gone in the history of mankind. And it's gone up way more than that. And yes, there were shortages. There were people, I'm working from home now. I never want to leave.
Or also, too,
I
I'm
wanna
working from
expand
home. I need more space.
Yes. So
I need a backyard.
that's going to change. So your housing price, mark my words, look at Zillow today.
The value.
Look at Zillow today. And I'm just using Zillow, whether it's accurate or not. It gives you a baseline. Look at Zillow today and look at Zillow 6 months from now. You're probably going to see, I'm not saying a 20% whack, but you're going to see a 5% decrease maybe, maybe a 10%, maybe a 10% decrease. And the fact of the matter is there are new people, and I know you guys own a home, but I mean, there are young people that are trying to buy right now that cannot. And not because their credit's not good, not because they don't have the down payment, is because it's just unaffordable because wages haven't kept up with what's going on with the housing market.
This is so refreshing to hear you say.
Well, I really couldn't care less. However, my daughter and my I'd like to buy a house at some point. All right, so and Daddy will help, but Daddy can only do so much.
Left wing.
I'm no left wing, I assure you.
Hugger.
Oh, please. All right. By the way, my Tesla's being delivered. No, never. No, couldn't do it. But I wouldn't mind renting one or driving one for a day. That'd be okay. That'd be fun. So anyway, let's talk about what could work in this market. All right.
Let's get defensive.
I think defensive is not. I don't think you need to be totally defensive because I think this is just a short-term pullback. I think we're going to see September's going to be crappy, but I still believe that when I talked about from that second half of the year, we're going to be up the second half of the year, but we're going to be down for the year. And I truly believe we're going to be down 5-ish plus or minus a few percentage points down for the year, which means that we're probably going to be up 5, maybe 10% between now and the rest of the year. That's what I believe.
Which from June 16th to the end of the year, I will take happily.
Right. And
going
because
into that third year of a presidential cycle, yes.
And that's the key thing here because, you have these markets that are likely going up the end of the year. Normally happens. And we have, of course, we don't know what's going to happen in the midterm elections. We have an idea. But we don't know.
What the market wants.
We don't know.
Gridlock.
I mean, the market wants gridlock, so they would love to have a Republican House or Senate or both.
Right.
That would be okay. And then we still don't know as far as the president. Then you have the presidential election, which they'll start campaigning next year.
Got a headache already thinking
which is a
about
nightmare. And what's happening now is that how many negative campaigns are you seeing on TV now?
I was just talking to my dad about this. We were talking about the market earlier, and he was like, I just keep hearing about the negative this. I'm like, Dad, if it bleeds, it leads. Positivity doesn't sell. Of course, with breaking news 24 hours a day, it's all about how can we make you fearful. I was watching these ads, and I watch them differently now than I used to when I was younger. And I used to believe, I believe it. But now I see how they cut and paste these ads. Take it out of context. Boom.
I see how they'll say something like, I would not vote for this. And then they'd show her, I did not vote for that. And I wouldn't. We don't know where that came from.
No.
We don't know where that, it's just, it's really, really bad. And I think the campaigning is disgusting. And the more and more I see it, the more and more I get turned off. And they keep hitting me with you getting text messages now like crazy? Before the primaries. Yeah.
Also, I'm getting and it's funny because we still, I don't even listen to what the contestants have to say on Jeopardy. Like, I'm not there for them. But all you see when you're scrolling through, and if, God forbid, we're busy and we can't hit that fast forward button right through the DVR, all it is just local. And soon it's going to be national, but campaign ads. And it's just so negative. It's gross.
Yeah, it is gross. And so that's what we have to deal with. And that also adds to negativity. So let's
listen to us, not them. We're out here. We're trying to have rational conversations.
And we're not telling you.
I'm not telling you how to vote at all whatsoever.
Far be it from me. Vote who you want. I
couldn't care less.
Couldn't care less.
It does not matter to me because it doesn't affect how the market is going to.
Even with the governorship here in Florida, you're hearing both sides, which is, in my opinion, both sides it's a bunch of bullshit. One says one thing, one says the other thing, and then they attack each other.
One was one position one time, and then he was in the middle, and now he's on the other side. It's like, I want you to evolve, but are you doing it because it's cool and fashionable, and that's how you get elected, or do you actually feel that way?
I appreciate you saying that. Yeah. Anyway, so let's talk about something really important. Let's talk about the some stocks that we like, or some markets or areas of the market. I have to think that next week is a big event for Apple.
Excited.
For Apple, you have an iPhone 12?
Yep, I've got the mini. I've got the
You got
watch.
a 12, right?
Yep.
Okay.
But I have the mini, so people are like,
so you're not in the upgrade cycle yet.
Oh no,
obviously.
I am.
You are?
Oh yeah.
From a 12, you go to a 14.
Yes, because the camera on the mini sucks.
Okay. So
sorry.
Me, I have a 13, and I will never have an Apple Watch. Never. I tell my family.
I was in the never camp. I'm training for a half marathon. It's very helpful.
I won't be able to see it. I couldn't see that.
The font, Patty could see it. The font, you can make it so big, Patty could see it.
Well,
so I don't want to hear that.
That being said, I have way nicer watches to wear, in all fairness.
Without a doubt.
We have nicer watches than an iWatch. But
an iWatch.
Whatever it's called.
No, I think that's a better name for it.
Isn't they called an iWatch?
No. I also thought the AirPods should have been called iBuds.
I thought they were.
No.
Okay, so let's take a look at a chart. Because, by the way, they have their big product release. They do every September.
September 7th.
And here is a chart of Apple, which, by the way, has done really well this year. Off the lows of 129. Look at that rally to 176. Now, what's interesting is pulled back right to the 50-day moving average. Right there. Look at that. That's beautiful support. Now, a little increase in volume, but everything's been kind of up on the sell days. Typically, though, Nick, the question is how they perform after their product launches.
So I think afterwards it kind of falter a little bit as far as the stock is concerned in the performance. However, it's when they report earnings after that holiday quarter, which starts with them announcing a new product in September. Then they've got that holiday quarter that incorporates Hanukkah and Christmas. And then I think at the end of the day, now on a pullback is a time to, if you don't already own it, potentially get in.
Yeah, I mean, look.
Not a recommendation, just something we're bullshitting about. Call us to find out more.
Understand, Apple's our number one holding. We own it. And we've owned it for many years. I have it as back as 2011.
$11.
Yeah, that's the cheapest price we owe Apple at. So
it's so cool to see that.
It's funny because I pull up a client's account, see cost basis, 1,200%. So that's all good to see. But Apple, of course, they're going to launch, and they said there's going to be a big cycle upgrade, a big cycle upgrade. And I saw a stat that if they just raise the prices by $50 on their Pro Series, that it's going to generate 10, 12, 14 cents more in earnings per share to the bottom line, which is a big deal. So there are some people that do like it. So the stock here, if you have never owned Apple, I'm not going to go out and average up for clients. But I would take.
Already grown to be so large.
I would take, though, however, initial positions for new money, new clients who are coming in. So I want to own some high quality stocks. I think this is high quality. I mean,
think this also could be a defensive play. It's not your traditional.
There is, there is talk, Nikki, that this is now a defensive stock because think about this: there is no product loyalty like there is with Apple.
They created it.
They created product loyalty to the freaking nines. I mean, think about this, folks. Now, I have a Mac. I never use it. And literally, it's been sitting in my office for 2 years.
iPad.
I have an iPad. I have an iPhone.
You got the
AirPods. But a lot of people have the watch, the iPad, the Mac, the this, the that.
They do a great job at keeping you in the ecosystem.
Because
it's a very closed ecosystem.
iTunes and the music
just
and all that.
Your text messages. The fact that you've got green and blue text messages. So if you're an iPhone user, I can tell if you've read my message. I can see, if you're typing back to me. And it's,
really?
Yeah, absolutely.
Oh, I know the 3 dots.
Right, the 3 dots.
That excites you, right? The 3 dots. Oh, they're responding.
It is. It's sometimes like, oh shit.
They're responding.
But that's different than when you're interacting with an Android user. Like they do everything they can to get you in and keep you.
Yeah, look, this is a company that to me has been unbelievable. And
services now they're with the new thing that they've launched as far as they want to protect your privacy and you're not getting tracked as much as far as when you're using other apps, and that's so that they can build their own advertising.
Of course.
In-house. So
they're going to be able to say, okay, you can do Apple specific advertising. Say we will sell it and we will make sure it gets to our people. Right. We have gazillion users, quadra-bajillion.
Quadra-bajillion.
I never get that right. I never know. Okay, so let's talk about some of the stocks. I do think that Apple's interesting, but I want to talk about a couple of recession stocks that I think or industries that I think will do okay in a recession, because the
ravishing recession.
The ravishing recession. I happen to think that we are probably in one. But this is Google. I don't think anything's going to affect what Google does. I mean, yes, the chart doesn't look great, but they trade at a 21 PE current. When you go forward, it's going to be less than that. And I just kind of think that at these levels, Google is probably a really, really good value, especially after the split. Then all of a sudden somebody's going to think, oh, wow, I can buy Google at $108 a share. I think that it's probably a good value. That's a place you maybe want to put some money if you could assume single stock risk and something that's technology oriented.
All of that and then some. I personally own Alphabet. I've owned it
Me too.
pre the split. I think now I'm going to go in and buy some more and average down as far as my cost basis goes, because Google, I think, is being punished because of the fact that they're a tech stock and we are in a tightening monetary policy environment.
And I think your
it has nothing to do with the balance.
I think your downside's right here. 104, 10.
The cut, like
I
what the company
agree.
does. It's just it also owns YouTube, which is the second largest search engine in the world.
And I'm seeing more and more, Nikki. This is just almost conspiracy theorist, and I'm not one of those.
YouTube.
I'm not one of those. No, I'm seeing more and more. I always thought, I heard from a year ago that TikTok was maybe bad in your phone and getting all this stuff. Now I'm starting to see more people say, wait a minute, TikTok is
egregious when it comes to any privacy violation, and it's not an American company by any means.
No, it's not. It's Chinese.
And so you are voluntarily giving over, like, I'm talking location, I'm talking who you're talking to, everything that you do on your phone. You should just assume that whatever apps that you have know that shit about you.
Yeah.
And do you really want, like, Xi Jinping knowing where you're going, where you're worshiping, who you're loving? It's not a good idea.
So anyway, I think that if
Terrifying.
TikTok starts getting more and more in that forefront,
more and more. Lee, do you know how much time Gen Z and millennials are spending on TikTok?
I don't, because I don't even have the app, so I couldn't tell you.
It's insane.
How many hours?
Like 40 hours a week on average. I will come back.
God, that's
not
ridiculous.
the following week, or not next week, the following week. I'll come back to you with some really terrifying numbers about the average time that someone who has TikTok has spent on it since the start of the pandemic to now. It's revolting.
The only thing I see of TikTok is when my buddies send me stupid ass videos.
It's addicting as shit.
How can it be? I would never be addicted to it.
I mean,
ever. I never even. I don't do YouTube. I don't do any unless I'm looking up something on how to fix a toilet. I mean, seriously.
Yeah, no, I go to YouTube University if I have a specific need, but I don't get sucked into the little thumbnails.
No.
But the fact of the matter is, it's so, like, you know how when you're just scrolling through like a Facebook or an Instagram or whatnot?
Okay.
Yeah,
I get that.
So TikTok is a video platform that does that. And all you have to do is go up and down. It's so simple. You don't have to swipe right. You don't have to swipe left. You don't have to like anything. You tap it twice to heart it, and it's just continuous. And the algorithm is so damn good that it will just, whatever you're into, the longer you spend watching something, the more that algorithm learns.
So do you have the app on your phone?
Yes.
You just said all this crap and you still have the app on your phone.
Okay, so I don't have any other social media. I don't actually have a TikTok. I'm an egg. I'm not even a person. They don't have my name. Do they have access to my phone? Absolutely. Do they have access to where I'm going? Sure. Does also my government? Yes. Do I care because I'm not doing anything wrong? Yes.
No, I know. I'm
right.
not. It's not about that.
I do care. No, it is. It's a bit hypocritical.
No, but what about if they're using that for nefarious reasons?
They absolutely could. And you know what? I'm willing to take that chance because it makes me have relevant jokes with my friends.
Okay.
And that's worth it.
Wow. So you're railing against TikTok, but you use it.
I can agree and acknowledge how invasive the privacy.
Okay. I don't know because I don't use it. I don't know. I've never put the app on there because I'd heard from the beginning it was a Chinese thing. They're trying to infiltrate your phone. I not that I care because my stuff, I'm fairly protected with all I got extreme difficult passwords, by the way. You know that, Nikki.
Yes, you're very cautious.
Yes, I have put serious passwords.
You love two-factor.
I can't stand two-factor.
When you get two-factor, you're like, oh yeah.
Don't ask me for a password, then say you want me to punch in a code. I hate that.
When we have like something that we're sharing, like, Lee, what was the two-factor? You're like, damn it.
Yeah, she'll have to text me. What's a two-factor if I'm not in the office? Okay, so I said I like Google, right? Mm-hmm. And I'm going to go now. I want to go to another stock, but then I want to go to some sectors.
I bought this at the high, and I don't even care because this is such a long.
You bought it at the high?
Yeah, in my Roth at 18.
Okay, it's not a big deal though.
No, but
This is
I don't care.
ChargePoint, by the way.
To me, this is long term.
I own. We have some clients that own ChargePoint because it's a high volatility issue. I own it myself personally. I bought some. I made it clear. I think a week ago or two. I bought some at 14 and change. But anyway, ChargePoint basically is going to be everywhere. That is going to require EV charging stations.
It's going to be across the street, hopefully, at our new office at that Starbucks.
Maybe so.
So while your car is
Yes,
sipping
we are.
electrons,
We are moving
you can be
offices.
sipping coffee.
But let me show you this. This is a long-term downtrend on ChargePoint. CHPT is a ticker symbol. But look how this works. A series of lower highs and this is a beautiful channel. Lower lows. Lower low, lower low, lower low. Then big volume pops it through that after a big run. Because remember, the run was from $11 right here, went to 19. It gave back some of that, got down to, hold on, I will tell you right now. Jeez. How am I going to do that? Okay, there we go. Track price. It got down to from 19 down to 14. So think about that. So that was a 50% retracement right here. 50% retracement. And now here we are. They reported earnings that beat. Now they lost money, but the losses were less. But their revenue was significantly more.
That's the thing. They're a bit high flying as far as the tech goes.
Absolutely.
They don't have a PE because,
So the stock today was up 12%. Okay, that's today. And the volume was absolutely incredible. The volume was double the average daily volume. So that's a stock that I think if a recession happens, I don't think it's going to affect them. They're going to put those charging stations regardless.
Right, because we have, as far as the government goes, decided to fund EV charging. And
Absolutely.
I really think that the measures that are being put in place in order to promote EVs and also to make them affordable with certain tax credits and things like that are really only going to charge up that stock.
Yeah, absolutely. Charge up the stock. Very nice. Also, I like Occidental Petroleum, OXY.
Happy birthday, Warren.
Yes, Warren
Buffett.
I was gonna say we have a client named Warren with the same
that we just saw
with the same last name yesterday, by the way. And
we love you too, Warren.
He was Warren Buffett's 92.
Mm-hmm.
Okay, 92. I saw it today. All right, this is Occidental Petroleum.
He looks great for his age.
He does. Actually, he does.
He does.
He looks.
And he eats
maybe
like McDonald's
80. Yeah.
every morning.
Incredible. Look, this is a stock that we jumped on his bandwagon and I started buying it in the low 60s. Actually, I think in the 50s. Mm-hmm. Actually, it's been a little bit. So probably around here. And it's run up a little bit. We buy more when it pulls back. But I think this is probably a nice play to own with the energy sector. And the fact that Warren Buffett has been approved to own 50% of the company. So there's something,
21%
yeah, and there's something going on there. Why is he wanting to get approval to buy 50% of the company?
I think he wants it as a hedge for Berkshire Hathaway. He's built that company. That's his legacy, is Berkshire Hathaway, and it's railroads. They have every part that you need for a conglomerate except for an energy source. And this is a way to hedge against those costs.
His biggest holding, however, is Apple.
It's grown to that.
It's grown to that. I'm okay with that because I own...
It's our biggest holding.
A little bit of Apple. Anyway, so I like this Occidental, I think, on a pullback. And I was actually saying, if you see a pullback to right here, 66, I would really jump on the bandwagon. We may see that because they all got a little bit hot, a little bit of just too much movement. I think on a 66, I'll be buying more at 66. I don't want to buy it here. I think on a pullback, so I think that's okay. Then in general, I think healthcare.
Also going into the winter, I think that this winter is really going to be kind of a crapshoot as far as...
You never know. It's hot as hell here in Florida.
Yeah, not in Europe, though.
No, but, who knows? Look at what natural gas has done.
Right.
and it's like more than doubled. So I do like that.
I think it's a good
stock
energy play too,
within the sector. Yeah, and you know what?
which is a red hot sector.
And I'm not ashamed to say that we're trying to just ride his coattails.
I'm sorry, the greatest investor of our
Although
generation.
I think I bought Apple before he did, but anyway,
I believe that because he was late to the tech game.
he was late to the
he's
tech
old.
game. He didn't like any tech actually. And all right, so
Those airlines.
yes. Lastly, no, not lastly. I like healthcare. We did a move in our clients at portfolios, went from pharmaceutical specific healthcare to generalized healthcare, only because I thought we needed to have some medical instruments, equipment, insurers, all that exposure, which we did not have with just having not biotech, but
Drugs.
pharmaceuticals.
Okay, boomer.
Okay.
Just kidding. No, but I mean, generally, for anybody, I don't care how old you are, healthcare is not getting cheaper. That's the one thing that's going to be inflating higher than inflation is these days on an annual basis. So
I'm going to throw another spec out there. Yeah, I am.
I'm sorry, are you taking a page out of my book?
Oh, is this your book?
I talked to you about figs last year.
Okay, well, okay.
My sister's
Now you know how
nurse.
old I am. So I don't remember that
Oh,
stuff.
stop it.
This is
This
figs.
is the Lululemon of healthcare professional attire.
And it has been a disaster since it went public. Absolutely horrendous. This is where it went public at $22 back in May of 2021. So, okay, if you're making that point, I'm glad I didn't listen to you. I'm glad I didn't listen to
I
you.
threw it out there. I was like, hey, I think this is an interesting play.
Okay,
It's
so
the athleisure of
it really
scrubs.
is. So, that said, I like healthcare, and I found this, and I was looking at some things that looked like they were interesting, and looking at some technicals.
Healthcare professionals need to wear
They do,
clothes too.
they do, and this one may be interesting. Again, I put this in the charge point category.
Without a doubt. This is hard rock money. This is not a core holding. This is an own. It's not a lease. It's not a short-term play.
Yeah.
If you have a time horizon measured in years and you can assume single stock risk, this is something we should talk about.
Yeah,
See
so
if it's suitable for you.
I think it's now to the point where it probably is going to not go down much more, and you have an opportunity. Look, it was at $50. Now you have a chance to buy it below $12. I haven't bought it yet. Kind of looking to see.
It's on the watch list.
It's on my watch list for sure. And other than that, some ETFs and healthcare. I think that you need to own some healthcare. Nothing looks great right now aside from energy, and look at some other things such as staples and utilities.
Just
Okay.
because it doesn't quote unquote look good doesn't mean that this time, while we have some choppiness, while September is kind of ugly, doesn't mean that you couldn't be afforded an opportunity to get in to a wonderful company at a cheap
Great
price.
point, because just because it doesn't look great now and is not going to look great in 3 months, I don't care
Right.
what happens tomorrow to a stock I buy today. I truly don't. And that's one thing that too many people are focused on. They say, okay, I bought the stock at 20 today. Oh, now it's 19. Ah,
I can't tell you how many people
it's not
come
the end of the
in
world.
when Amazon was, $2,000, $3,000 for a share. Well, I mean, it's already done such a move, and at this
Right.
price, what really is it going to do? It's like, I'm sorry, you're looking at it on a trailing 12-month basis of what it has done.
Yeah.
Did you know it started out of some guy's garage? I mean, come on, it didn't start this way. It got to be this way for a reason.
Exactly.
You have to pay
And
for that.
And you know what? That's what we do, and we help your portfolios. We also will give you a risk assessment and make sure that we are in your wheelhouse. I want to make sure that we are taking the amount of risk that you should be taking based on our questionnaires and interviews and our whole process. And that's the thing, is most people don't have a process. One thing we do is we have a process, and we have a great staff. We have great people around us, and one of them is right here, our
The other one's
CFP.
right here.
Yeah, well, they
also got a
already
few
knew
others.
that. They already knew that. They didn't know about that. But anyway, CFP, Nikki Ward, and by the way, she has those initials, the
Letters.
letters. It's
3.
marks. Is that what you call it?
Yeah, the marks, the CFP marks.
Okay, she's got it. She's got it.
Official.
She's got it. So, that being said, we appreciate everybody joining us tonight. We're taking next week off.
Slacker.
Sorry, can't be there.
We'll see ya.
We'll be here in 2 weeks. So thanks for joining us, and we hope you share this. And if you have any questions, give us a call or email Nikki at StockDr.com. We will see you next time. Thank